Dominic, Craig, Dennis, thanks for being here, everybody. So let's get right into the chart. We'll start with the C setup that's on the table this morning. This is USD CHF. So you can see that the trade has already moved higher here from from 0.9189. So let's just call it 91.90 up to 92.11 now. So about 25, almost 30 pips here on this move. We're going to talk about how this move kind of aligned with Euro USD. But before we shift over and go look at Euro USD, I want you to just see where the bias comes from today on this trade idea. So if I just remove this white line here that's marking our divergence, you can see market sentiment today is very bullish. However, if you look at the changeover of day, and I blow this up even wider, you can see that it is technically starting the day in the sell zone. See at the changeover of day how the yellow line is below the 50 dotted line right in there. That is what we would call a swapping market sentiment line, because you have to be binary in your decision making, right? You have to ask yourself questions or yes or no answers, basically, to be as definite as possible. So here, if you are to go through the ASFX checklist and say to yourself, okay, is this a swapping market sentiment line? Right there at the start of the day, you can see it goes from the sell zone into the buy zone. So unequivocally, binary, yes or no, yes, this is a swapping market sentiment line. Now, where is the market sentiment line most of the day? It's in the buy zone. So that would mean buyers are in control. The EMAs are also in an uptrend. 50 EMA crossed above the 200 EMA overnight. 800 EMA is on the bottom. So we are in an uptrend. So the TDI mostly aligns with the EMAs, which feeds the long bias today. You want to mark off the high a day here in the Asian session only because it rejected that high here at the start of the London session. So when you look to take a trade long here, trading into this zone before it's broken, normally it will pull back and retest that zone, or it could find resistance at that zone since that's what it's done the 2 times previous. So now taking a trade into that zone, I think, is another thing on top of the swapping liquid 50 that we have to take against this trade. On top of that, another thing that could have been better about this trade is that if I extend the Asia high line, you can see the entry candle presents inside the Asian range still. On a Monday, trading in the Asian range is not something that I would recommend. On any day of the week, it's not something that I would recommend. Where I really would, excuse me, sorry. Where I really would stay away from trading in the Asian range is when you have bearish divergence present. So if you draw from the RSI high right here today to the price action high today, so if you connect RSI high to price action high, the RSI is falling, but price action, if you connect those same points, price action is slightly rising. So that is bearish divergence. So now you can see from my notes, it's a swapping liquid 50 to start the day. It's inside the Asian range. The divergence is in there, so you have to knock it, but it isn't overbought. It could be a lot worse. But still, those are 3 knocks against this trade setup. However, this 8 and 21 cross happens as it comes off the 21 EMA with a strong body, which is what we like to see for the A1. It breaks above the 8 EMA and closes bullish. That would be the A1 shift candle. RSI value confirms that as the shift candle. It's not just any 8 and 21 EMA cross. What we teach in the courses and what we trade at ASFX is confirmed with TDI value, and that's what we do our back testing on. So now, when you see that shift candle present, naturally you're looking for this to break above the Asian range, to get for a new high a day and to show you that it can continue. And that's what it does in the next 15 minutes. And then 15 minutes later, it shoots up, as you can see, to the ADR line, which it is kind of sitting at right now. I think the reason why you saw it shoot up like this after the entry presented is because we had this low impact breaking news come in today. Now, what they said here, SNB's, I don't want to say her last name, inflation is a key factor. We have not started to reduce our balance sheet, and we do not have instruments needed to make an exit when we think it's necessary. Both of those things do not sound good for Euro. So when you see Euro news like that come out, it pushed Euro USD down. And I think if Euro USD gets pushed down, because USD CHF is the inverse of that, it pushes USD CHF higher. So the US dollar here is getting pushed up by that negative Euro news, as that negative Euro news brings Euro USD down. So that's how the correlation will work. So you could look to Euro USD for a potential trade. However, the entry was much better on USD CHF, even though neither of them were worth a trade, in my opinion. Both of them were C setups. To me, this shift candle here on Euro USD, the market sentiment line is good, but the shift candle does not happen proper. When this bar comes through the 50 and through the 21 and through the 200 EMA, the 8 and 21 EMAs had not crossed down yet. The 8 and 21 EMAs cross here on the next bar. That's not a shift candle because it's not off the 21 EMA. So there's no entry here. And I also thought that this was going to break the pennant to the downside and then come higher because I don't really trust pennant formations. In my experience, they lead to a lot of fake breakouts before they move in the other way. But here you can see this pushing lower in the direction market sentiment tells you it should move today. But again, there is no shift candle here. There is no A1 entry here at all. So the entry, if you were going to take it, would have had to be UCHF. But in my opinion, this is clearly a C setup. I see somebody, Bougie to Goat, said it's a B setup. It is not a B setup if you're using ASFX rules. 3 knocks on it is automatically a C setup. Okay? So that's USD-CHF, where the bias is. Now you see the move on Euro-USD. I thought Euro-USD was going to come higher. As the market sentiment line started to rise this morning, and this was again trading in the Asian range, I thought this was going to continue to make higher lows and break out to the upside, using the support from last week and from Friday's low as the bottom for it to move higher. But it didn't. It just held that perfect market sentiment, and then the news pushed it lower. The one other comment I should make about this news for everybody listening, because I see we've got a good audience already this morning. With this news here, notice how we have no high impact or even medium impact events today. It's very quiet on the news front. This comes before we have NFP on Friday. If you scroll down to Friday, you can see we've got some high impact news. So today, with it being a very quiet day on the news, I think you have to take account for this low impact breaking news event to shake the market a little bit. When there's nothing high impact, it's a quiet Monday, and then you have low impact breaking news, it's still breaking news. And I think that's why you see Euro USD push lower, because they're saying, look, we're not tightening the balance sheet. We're going to continue to print stimulus, and we have no instruments for stopping the stimulus when we want to stop it. That doesn't sound like great news to me. For inflation, for economics, for everything. You know what I'm saying? In the comments, let me know if that doesn't make sense to you guys. But to me, it makes pretty clear sense. Quiet news day, so we get a low impact breaking event that can shake the market. Okay? Rushir said, how about Euro CHF? That's not a pair that I typically trade. Let's check it out. So Euro CHF, it's a swapping liquid 50. This is why I don't trade it. ADR is only 28 pips, which is just not that great. Comes off the 21 EMA here, moving up towards ADR. I don't hate that idea, Rushir, but this is just not a great pair, honestly. If you trade USD or Euro CHF, good luck. In my opinion, USD CHF is tough enough. Anything with a CHF on it is a slow mover. And with those slow movers, plus we have spreads, sometimes it's tough to get good risk reward. Make sense? Now, let me